Chris Marinac, who's Director of Equity Research at Janney Montgomery Scott, into the discussion. Great to see you, Chris.
Thank you.
As always, I mean, trading the bright spot, but perhaps the other kind of attraction was fewer negatives than might have been feared.
That's correct. I mean, I think it was a very solid quarter, and I think, if anything, the caution is going to be in the second and third quarter, and we're all waiting for a behavior change, whether it's C&I loan demand or just the reserve building that could occur if losses and the outlook changes as April and May unfold. I think it's still early, though.
So talk me through that in terms of the reserve building, because there was some of that, which probably wouldn't have come if not for the last couple of weeks of sort of turmoil in policy making. Was it significant compared to past crises or not?
No, very small. I mean, the bigger move occurred back in the second and third quarter of 2020 when COVID began. That was a very big change on reserve build. You had companies building 50 to 100 basis points of reserves to loans at the time. So today you're seeing reserves basically flat on the basis point side and generally up about 1% linked quarter. So I think you're going to see more building in the second and third, but whether it's dramatic like 2020 remains to be seen. I think a lot is going to be revealed these next 4 to 6 weeks as we see how the trade war and inflation and other data points come into focus.
Leslie, talk to me about the sort of personal tone from today's two big bank CEOs, Jane Fraser and Brian Moynihan, because both had challenges in the last couple of years. Jane in the sort of more of a slow process to finally turn things around. Brian in and around that sort of SVB issue a couple of years ago, but both probably pretty pleased with how things are going now.
Yeah, I mean, it was pretty remarkable. Their tone was surprisingly upbeat. I mean, we saw Moynihan also on Squawk on the Street earlier today, and Sarah kind of said at the end of it, you know, it sounds like, you know, you're not too concerned about all of the things we hear about with these headlines every day, and it's not really reflected as much in kind of your day-to-day operations quite yet. And surprisingly, Will, all of the banks that give outlooks for net interest income either maintained them or, in JP Morgan's case, raised it slightly, despite all of the various headwinds and the uncertainties surrounding the yield curve and what that might look like throughout the rest of the year. So all in all, I think some of the biggest fears didn't ultimately come to pass as it pertains to this quarter and the outlooks, and the tone was reflective of that.
By the way, we're going to play a bit of that interview Sarah did with Brian Moynihan in the next block ahead of a debate about the economy. Chris, bring it back to the valuations for us, because I guess they've pulled back a bit as a sector, but they had a terrific sort of 18-month run into the sort of December-January period.
Well, we've kind of round-tripped, if you will. I mean, we had the valuations improve since the election, and then we pulled back from about a 12.5 multiple on median for the KRE to about 9.5 as of yesterday. So we really returned to where we were. I think, if anything, the valuations are implying a much bigger haircut to EPS estimates than reality is. And I think, as Leslie is saying, the estimate changes should be much more modest, if at all, as you look at what we heard today and the last few days.
What's your hopes in terms of the investment banks, Chris, for trading in the next quarter? Because clearly they blew it past most of the banks, particularly on equity trading, for this quarter. But we haven't even got into what must have been a pretty successful couple of weeks or months for those that are trading the volatility.
Well, volatility is your friend. You said it. I think that April is going to be a very good month. The question is, do we go back to normal in May or June, or is it more of the same? It definitely could be another record quarter from the volatility side, which therefore would drive trading for the big banks.
And in terms of your top picks, which is your favorite at the moment? Is it big cap, small cap, investment bank, retail bank?
Well, I think that you have the biggest inflection coming on the mid-cap banks, where I think they were left for dead for a couple of days when the market sold off on the second and third of April. My opinion is that the regional banks and the mid-cap banks have a big inflection in terms of earnings. They have a lot of dry powder to do buybacks. And I think, generally speaking, their risk levels are very tolerable because they're not writing off that much of loans. So they have a lot of flexibility within earnings estimates and, frankly, with the stock prices.